In this video, we expose Jeremy from Financial Education on his recent Very Good Foods stock video.
Actually, I have nothing against Jeremy. I do genuinely like his content and laid-back style, but this video will show you why it's important to do deep dives into any stock you are investing in, which is what I try and do here on my channel as the paper bag investor. So Jeremy did a video on Very Good Foods, which is a company I've been pushing content out for especially in the last few weeks, as I feel they have a big opportunity in the next 12 to 18 months to potentially 4x. In his video, he shares a decent execution projection and a great execution projection. And I gotta admit, both his projections are really positive for Very, but they are based on just declining percentage growth rates, which gives me the feeling that he didn't really read or listen to the management's detailed discussion on what they are aiming for in production rates. So let's take a look at his analysis, and I'll give some further commentary. So here is his decent projection model, where he's pointing out 12 million in sales this year, and basically because they did about 6 million in the first half this year, so he just doubled that, 12 million. And then he's saying, okay, if they grow at a reduced rate of, like, instead of 200 and some percent this year, they grow at like 120% to 26 million, and then they'll get 26 million in sales, and then they half that again. That's 60% growth, would be 40 million, and then maybe 45%, 30%. He's just kind of picking some numbers, which is fine to do, trying to evaluate a company. But in the case of Very Good Foods, the management actually, they've been so severely capacity constrained on the manufacturing side, and now that capacity is doing like the next few years could do like a 30x and beyond, that these percent growth numbers in my mind are way too conservative for what at least could probably happen, or what management would hope to happen. So of course these could actually occur. It's a probable outcome, it's a possible outcome, but I think they're way too conservative. So this is the decent one, again, where he just took percentages and reduced them. And then this is the, if we skip ahead here, this would be his great execution model. Again, this year they do a little better. He's saying 15 million, and then 300% year-over-year growth, and then 160% year-over-year growth to 39 million. Again, he cut that in half, 80%, 60%, 50%. And gets out to, by 2025, he's talking 160 some million dollars in sales. Again, that's a tremendous growth for a $220 million market cap company. If they can do 160 million in sales in 4 years from now, 4 or 5 years, 1, 2, 3, 4 years from now, it's still probably a pretty good investment to hold for the next 4 years, and still will probably have a great return. But I don't really understand his numbers, because they don't talk at all about what management from the Very Good Foods actually talked about, and sort of the story that's been happening with their company has been so severely capacity constrained, and now they're rapidly increasing their capacity. They're going from like 1 million and 1.5 million, maybe they're at roughly, pounds of product per year, kind of annualized production now, to they're talking like tens of millions, 20, 30 millions, and beyond, even up to 100 million pounds of product produced per year. And they're selling their product wholesale rates of about $7 Canadian, maybe $5-ish US dollars per pound. So the projections here, I think, are way too small. But what really we could see for not just sort of a slow, gradual ramp up like he's projecting, I really think we could see a step change in production capacity, and then also a step change in sales that could be coming in the next few years, especially in the next 12 to 18 months, that first major step change. A tsunami of production and sales, if you will, could be coming. I'm going to jump over to a presentation that I did. So here's some information from the recent quarterly results. Their Rupert facility is the major next step change that's coming. They're planning to do 37 million pounds of product out of this facility, and they're commissioning line 1. There's going to be 2 lines at this facility. Line 1 is coming in right now, and they're targeting 40,000 pounds of, on average, per day of product on line 1, starting in Q4 of 2021. So this is really where the rubber hits the road as investors. Q4, we're really going to find out what's happening. Are they really executing or not? And then they're going to gradually increase that to up to 60,000 pounds per day in early Q1. So there's going to be a 40,000, sort of it's ramping right now up to 40,000 pounds and up to 60,000 pounds. And then wholesale, they sell this product, like I mentioned, for about $7 per pound wholesale. So we're going to take that $7 per pound number, and really, I think what Jeremy should have been projecting was numbers more like this: that if they do that and they sell most of the product that they're producing, which I think there's a good chance could be the case, then if they do 40,000 pounds in Q4 at an annualized rate, that's going to be 100 million pounds, or sorry, $100 million Canadian annualized. Given they're around 300 million Canadian right now, that's a price of sales of about 3. And then if they get to 60,000 pounds in Q1, and that's 150 million annualized, an annualized price of sales of 2. And then if they get the full scale production, I'm not exactly sure when that would be. It'd be like 260 million in possible sales from the product just produced from the Rupert facility, let alone the other facilities they have, which are much smaller. And then also the California Patterson facility that will be coming online in the next few years. For reference, Beyond Meat has a price of sales of 16, and Jeremy does mention this in his video. They have a 16 price of sales. So if you say as Very Good Foods grows, maybe they have a price to sales of 10 maybe. Could be even higher. The market might give a higher one, but I'm going to say 10, which is kind of what he went off of as well. So I agree with him on that. Then you're looking at then essentially this should mean the market cap to keep a price of sales of 10 as it matures could be kind of 3 times its rate in the next year. This could be even 5 times its rate in the next year or so as this Q1, as long as they can keep this annualized rate going and even increasing and sell all the product. I'm an engineer by trade, and at my school there was a motto to be thorough, meaning you've carefully analyzed all the angles and all the possibilities of something before recommending it or taking action. And while Jeremy's forecast is one possible outcome, and it's cool he did that, I'm kind of calling him out because I feel like he didn't really read the management report in detail, and I feel it's actually his projections are much less likely than in other possible projection, much higher projection more that I'm kind of showing could happen. I think that sort of scenario is actually more likely than what he's projecting. While he's projecting is still a positive outcome as an investor. I want to hear from you though. What do you think will happen with Very? And if you got value out of this video, make sure you hit that subscribe button for more of the bag. Follow me on Twitter at PaperBagInvest, and hit that thumbs up while you're at it. It really helps the algorithm. And most of all, remember, it's in the bag. Cheers.